Good day and welcome to the Rail Vikas. Ladies and gentlemen, good day and welcome to the Rail Vikas Nigam Limited earnings conference call. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions later during the conference. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please also note that this conference is being recorded. I now hand it over to Mr. Vishal Periwal. Thank you, and over to you, sir.
Thanks, Chris, and good afternoon, everyone, and good afternoon to our management. And first of all, thanks to the management for giving us this opportunity to host their Q2 FY23 earnings call. From the management team, we have with us Mr. Rajesh Prasadji, Director of Operations, RVNL, Mr. Sanjeev Kumarji, Director of Finance, RVNL. As usual, we will have a brief comment from the management on the gone by quarter, and then we'll open the lines for Q&A. Yes, sir, over to you.
Okay. So, if you see the performance of this particular company, we had a turnover of 19,381 crores in FY21-22. This is excluding GST. And for the first time, we had crossed the mark of 1,000 crores in PAT, that is the profit after tax. And we had done the commissioning to the extent of 1,020. For the first time, we crossed the 1,000 route kilometers. So what I wanted to say is that FY21-22, we had all-time high in physical as well as financial performance. And then we have started FY22-23 in a very big manner. In first quarter, we had a jump of turnover by 20%. And then in Q2, this jump has again by 21% with respect to the turnover of Q2 of FY21-22. The profit after tax also increased from 551 crores to 750 odd crores. That is an increase of 37%. The PAT also increased from 433 to 580 crores. And then the commissioning, the physical part I always connect because both are linked. So physically, the commissioning part has increased. And this year we have commissioned more than 488 kilometers. And last year it was around 250 kilometers. Now if you see the gross margin by turnover, the ratio in first quarter in FY21-22 was 5.49%, which has increased to 5.9%. So there is an increase in the gross margin also. Now, if we highlight, I just wanted to highlight few things which has happened in last 3 months or so. First thing is that CARE had done the rating exercise, and they have rated RVNL AAA with outlook stable. So this is number one. Number two, the administrative ministry, that is Ministry of Railway, has approved RVNL to Navratna status. You must be aware that we are having the Mini Ratna status since September 2013. Then, for the first time, we are in the process of getting an overseas assignment of more than 1,500 crores. We are going to increase our footprint in the metro construction in Chennai and Surat. For the first time, we have bagged 2 orders for about 500 crores for development of some canal in Ahmedabad. We are already working in the HAM model, NHIDCL model, and I am also happy to announce that we have participated in expression of interest of a project by Exim Bank for construction of 10 kilometers of metro in Mauritius, and we have been shortlisted in that. So, overall, we have started bidding in the market, and we have participated in more than 40,000 crores of project, and we have bagged or have become L1 in projects worth 8,200 crores plus. So what I wanted to tell you is that in terms of the physical performance, in terms of the financial performance, there is an upward trend, and see, the key strength of this particular company has been the flexibility and the focused approach. We were flexible, that is why we could change our mode from assignment to the market, and then we have started bidding in the market. We opened the BD cell, that is the business development cell. procurement cell, we opened the legal cell, then we have tried to strengthen the design cell. So a lot of activities have taken place, and we have signed a large number of MOUs in the past. And see, this particular company is basically under Ministry of Railways, and we are fully committed to the vision of the Honorable Prime Minister and Honorable Railway Minister. And the parents, we are the children. The parents want their children to stand independently and grow. And today being the Children's Day, I must say that the soul of our company is healed by remaining happy and patient. And that is why you see us always smiling and performing. So thank you very much, and we are open for the questions and answers.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait a moment while the question queue assembles. Our first question is from Randeep Sen of MAS Capital. Please go ahead.
Thank you for the opportunity. Sir, in FY22, as you rightly said, we had seen a physical construction of 1,020 kilometers of railway lines. So will we be seeing in FY23 that number being overtaken in the backdrop that as on date we are at 488 kilometers?
See, yes, we had commissioned 1,020 kilometers to be precise enough, and till date we have commissioned more than 488 kilometers. So, and last year up to this period it was around 250 or 260 kilometers. So if you compare with respect to the previous financial year, yes, we are on the upward trend. This year we should cross this 1,000 kilometer again. But subsequently, there could be a downward trend because we are getting the assignments from the market which are not the typical railway projects. But this financial year, FY22-23, we are definitely going to touch this 1,020 kilometers. We must exceed that.
All right. Very, very heartening to hear that. Also, sir, congratulations on achieving the Navratna status. It's indeed a proud moment for any shareholder. My next question, sir, was on the, I think you mentioned about some huge opportunity in the Kazakhstan railway project worth 20,000 crores. So can you throw some light on that project?
Okay. See, RBNL had earlier signed an MOU with government of Kyrgyzstan, and basically we have identified 4 number of such projects, and this is about 1,000 kilometers, and first project is around 225 kilometers, second project is 180 kilometers, then there is a ring railway, and then some reconstruction of the existing track. So altogether there are 4 projects, and we are working on this, and total length of the project is 1,000 kilometers and costing, again the DPR etc. has been prepared, it is around 20,000 crores. And in time to come, we can see that this project is moving, and we are happy to again announce that this project will be on nomination basis. So this is again a very plus point, and we will have the footprint overseas.
All right. Thank you so much, sir, and wishing you all the best for the upcoming quarter.
Okay, thank you.
Thank you. The next question is from Janet Tana of Voyager Capital.
Thank you for the opportunity, sir.
Yes, please.
Yeah, so I wanted to ask about the update on Chardham project, because as for previous quarter, MOR was yet to sanction the project. So can you shed a light on that?
See, the role and responsibility in Chardham project given to RVNL was for the preparation of the feasibility studies and the DPR, which we have already done. The project is yet to be sanctioned. The ministry is yet to decide on through what basis and through what procedure they would like to get it executed. But since we have got a lot of expertise and experience of undertaking the projects in the hilly terrain, we are confident that whatever may be the model, we will be one of the players who will be considering very actively and executing this project. This is number one. Number two, we are executing this Karnaprayag Rishikesh project. This is a 125 kilometer long project, out of which more than 100 kilometers is tunnel, and the longest tunnel is 15 kilometers. That particular project we are going to conclude and commission by December 2024. And Chardham project, the Kedarnath and the Badrinath, they all will be extended from this particular line only. So already you can understand that some part work has started in form of some other project. We have got the expertise of working in the hilly terrain. And since we have also prepared the DPR and we are involved right from the beginning, we are comfortable in executing the project. Only thing is that the Ministry of Railway has to sanction the project, and then they will have to decide how they will execute it.
Okay. So one more question. So you have been declared a successful bidder in international project in Maldives for the development of UTF Harbour. What kind of margins can we expect from this project?
So first, let me explain about this particular project. What is the background and how we have got it?
Yes.
Ministry of Railways stopped giving the projects on a nomination basis. Then we approached Ministry of Railways for a request to be made from their side to Ministry of External Affairs. And in December 2021, Ministry of Railway issued a office memorandum. We call it OM, and strongly recommended RVNL, stating that the rating of this company is excellent outstanding for the last 11 years. It is number 1 PSU for the year 1920. It is contributing more than 35%. And they advise Ministry of External Affairs that whenever there is a query or you want to execute any project of importance, you should consider RVNL. So then they called expression of interest, and then we qualified in this AOI. And subsequently, based on the QCBS project, we have become the L1 bidder. The name of the project is the Development of UTF Harbour Line Project. UTF is basically stands for Uthuru Thila Palu Island. It is about 15 kilometers from Malé. In Maldives, there are about 1,200 number of islands, out of which 186 islands are developed. This island is about 150 meter by maybe 100 meters, which is required to be developed to 15 hectares. This is a project which will be used by the MNDF, that is the Maldives National Force. And the scope basically comprises of the marine works, buildings, infrastructures, equipments, and the project is to be completed in 2 years. It is a very challenging project. And some of the figures which if I tell, then you can understand and visualize. The dredging is required to be made to the extent of 14 lakh MQ. Then the huge construction material, the requirement of cement is more than 42,000 metric ton, steel 15,000 metric ton, and RVNL for the first time shall be executing project overseas, and that also a mega project. Now coming back to your question about the margin, see, our first interest was to grab one project from basically we wanted to make a footprint in the overseas projects, and that to non-railway projects. We are getting success in that. We have we have kept adequate margin, but since altogether it is a new kind of project, new area, new challenges would be there. So at this moment we are not sure that how much margin we will be getting, but we are 100% sure that it will bring us to the next level, and we will certainly earn some good margins from the project.
Okay, sir. Thank you. Congratulations on Navratna status. Thank you.
Navratna, I will again explain. This has been administratively approved by Ministry of Railways. The proposal is with the Department of Public Enterprises. They are working on this, and then once it is declared, once it is considered and approved, then it will be notified.
Thank you very much. Ladies and gentlemen, just a reminder, if you wish to ask a question, please press star and then 1 to join the queue. The next question is from Hardik Jain of Watson Financial. Please go ahead.
Yeah, good evening, sir. Thank you for the opportunity. Sir, you mentioned that we have already bagged 8,200 crores of orders in first half. Is it right?
Yeah, what I had said is that till date we have participated in market, the bidding, it is about 40,000 crores plus, out of which we have bagged or we have become L1 to the extent of 4,000 crores.
4,000 or 8,000? Sorry,
Sorry, 8,000 crores. I am extremely sorry, 8,000 crores. 4,000 crore figure was of Q1. After this Q2, it has become 8,200 crores plus.
Okay, right, sir. And sir, in your results, in the footnote, you have mentioned that we are waiving some charges for KRCL. In this Krishnapatnam Railway Company, you said that we are entitled for departmental charges of 5% of total cost work, and we have received representation from KRCL for waiver of these charges. So if we waive these charges, what amount will have to be reversed from the receivable that we have already booked?
We have not calculated that, but see basically the model, the revenue stream of Ministry of Railways, they have laid down certain revenue stream. And then as per the construction agreement, we are having different kind of models for the different SPVs. So most of the SPVs are basically representing, and then we have asked that any of the model which is basically convenient to you, whether it is the Ministry of Railways model to RVNL or any other SPV, then we can consider that. So earlier they had made a proposal that the 5% departmental charges in addition to the other charges, it should not be considered. So we have not been charging that, and it is a matter to be discussed by the board of directors, and then accordingly we will communicate.
And what is the outstanding amount due from KRCL as of today, sir?
Just a minute. What you are saying? What is the outstanding amount? Okay, that figure is available with me. It is approximately 809 crores is the construction cost, and then 611 is the interest. So it becomes 1421 crores.
Okay, and if we decide to reverse any of these charges, so out of this 1,400 crores, some amount will be reversed, and that will hit our P&L also, right?
No. Absolutely. The Director of Finance will just supplement.
Yeah, so far we have not billed for this 5%.
Achha, we have not already billed for it. Okay, so we will not bill it, so it is not going to impact the numbers.
It will not impact the numbers.
Okay, sir, and when I see the balance sheet, so our current liabilities have reduced from 4,500 crore to 1,000 crores, and simultaneously our cash and bank balance put together has been reduced from 6,700 to 2,600 crore. So basically, the advances that we would have received from our customers would be consumed for the project. So what is the payment status right now? Should we expect fresh advances for the projects that we have in our hand? Because current liabilities have come down from 4,500 to 1,000 now.
No, there will be no further advances because we follow the reimbursement system. So at the beginning of the year we had some advance, but there will be no further advances till this year.
Okay, so current liabilities, you mean to say, will remain at this level, and even the cash and bank balance will remain at what level it is?
Almost this level.
Okay. Thank you, sir. I'll get back in the queue if I have any other questions. Thank you.
Okay, fine.
Thank you. The next question is from Deepak Mehta of Bank of India Mutual Fund. Please go ahead.
Congratulations for a very good set of numbers. My question is regarding the shift in the Indian Railways ordering process from nomination basis to tender basis. How will competitive intensity change from both private as well as public players, and how will our margins pan out from here on?
Just try to be slightly louder because the last part we could not hear from you.
So with the shift from nomination basis to tendering basis, how will competitive intensity change from both private as well as public players, and how will our margin get impacted due to this?
Okay. So first part is the nomination to the bidding. See, these railway infrastructure projects are complicated, complex, and it requires a lot of integration and interface. RVNL has been pioneer in this. We had executed more than 120 projects for Ministry of Railways, and we were involved right from the concept to commissioning. We call it the full project life cycle. We were very confident, and we have delivered more than 35% of the railway infrastructure projects. So what I wanted to tell you is that the contribution of RVNL were tremendous in developing the railway infrastructures in the country. Now there is a shift, and there is a shift by Ministry of Railways that they are not going to give us some nomination, they will be calling bids. But at the same time, there is also a shift in RVNL's approach. We have gone into the market and we have decided that we will not remain limited to the Ministry of Railways. We are basically in trying business in NHAI, road sector, HAM model, then the marine works, overseas projects, metro construction. So basically we are creating large number of verticals in all kinds of infrastructures we are working. So what I wanted to tell you is that since now it's going to be a mixed basket, and the margin of course will change, and with the passage of time there is a likelihood that the margin will increase. As I said in the beginning, that we are not only in the process of opening the bidding cell, that is the business development cell, but also the procurement cell. By having the procurement cell, we can increase the margin of basically procurement of material like steel and cement. Then we wanted to have the legal cell. We wanted to strengthen the design cell just to tackle the EPC contracts and EPC tenders. So there is a shift. Yes, there is no doubt about it. And some astonishing figures are coming, like 8,200 crores, which I am mentioning. Out of 8,200 crores, the railways projects are only of about 500 crores. And rest are either metro or the road sector or the overseas marine works or some other kind of, even the municipality in Ahmedabad. So things are changing in both the fronts, and we are pretty sure. See, the Ministry of Railway is having a huge plan. If you have gone through the National Rail Plan, what they are planning to have is that by the year 2030, they want to have all kinds of infrastructures in place to cater the demand of 2050. See, the modal share of railway is around 26-27%, and by the year 2050, they want to make it 45%. The reason for this is that we will have the greener and then safer and then environmental friendly transportation system, and it will lead to the growth of the country. So overall, what I wanted to conclude is that the margin is again going to change with the passage of having some experience. It will increase. And regarding the Ministry of Railways projects, we are very keen because we have got the expertise of execution of the railway projects only in the past. So we want to remain associated with the railway projects. We will participate in the railway projects, but we don't know how many projects we will get. Regarding the competition with the private players, see, the private players need some kind of, it requires a lot of technical expertise, which I don't think the private players are having. It requires a lot of interface. If you are commissioning a double line, then it is to be integrated with the existing yard without closing the operations. So the projects are complicated and complex. We have got the expertise, and private players, whether they will get success, they will not get success, only the time will change. But we are confident that in time to come, we will have sufficient number of orders in railway sector as well as in non-railway sector. And with the passage of time and with the kind of experience we gain, we are going to have margins available.
Thank you, sir. That was very, very helpful. Just one more question. What will be our approximate market share in the line of work which we are doing? For example, in double lining, what will be our market share in Indian Railways?
See, we have got an order book of around 55,000 crores. And out of 55,000 crores, if you see the double line figure will be around maybe around 55 to 60. Sorry, double line will be around 20 to 25%. The new line will be around 55%. The metro projects will be around 12%. Turnkey projects and the gauge conversion and the railway electrification, the basically scope in the cells have gone down because the railway electrification is getting over in next 1 year time. Gauge conversion is mostly completed. And the turnkey project, since we are not getting on the nomination basis, we have already completed 15 works. So this is the breakup of the 55,000 or 50,000 crores plus which we are having from the Ministry of Railways. This is the breakup of the basically projects in terms of the double line, new line, MTB, turnkey projects, gauge conversion and railway electrification.
Sir, my question was slightly different. What will be our market share in the Indian Railways capex? For example, if 100 rupees is spent on double gauging, then how much is done by us?
See, till FY21-22 and maybe in FY22-23, we will be basically doing a contribution of 35% in terms of commissioning and maybe slightly more in terms of capex in these particular infra projects. But after FY22-23 or maybe after FY23-24, things will change because we have to compete in railways to get the projects. Number one, and we will not remain limited to only the Indian Railways. We will be executing so many projects in so many other sectors with so many verticals and even overseas.
Thank you, sir. That was very helpful. That's all from me.
Thank you very much.
Thank you. The next question is from Ash Shah of Elara Capital. Please go ahead.
Can you hear me, sir?
Yeah, very good evening. Good afternoon. Tell me, please.
Yeah. Good evening, sir. So can you just give me the order book position as of Q2 FY23? Exact one, if you can.
See, I said we have got the three kinds of models. One model is the projects which has been given on nomination basis by Ministry of Railways or by some other government. So this will be around 50,000 crores, and in FY22-23 we have got zero. But again, we have signed an MOU with the government of Kyrgyzstan, and there we are expecting an order of 20,000 crores in time to come. We have got the second model, that is bidding from the market. Till date, we are having 8,000 crores of new works, new projects, which we have bagged from the market. We are eyeing for another 6,000 to 7,000 crores by March 2022. And SPV model, the third model is the SPV model, where we have got around 1,000 crores during this FY22-23, and we are expecting an order of another 3,000 crores in the SPV model. So if you see the orders at the end of the FY22-23, after having the turnover, the order book will remain same around 55,000 crores plus. And if you get the order from the Kyrgyzstan, then it will become much more than that. And see, the target of RVNL is to have 1 lakh crores of orders all the time. If you are having a turnover of 20,000 crores plus, so we want to maintain basically order book of 1 lakh crores, and in time to come we should be able to achieve that.
Okay. Thank you so much. And second question would be, would you maintain your FY23 guidance of 15 to 20% revenue growth and the 21,000 crore plus revenue and bottom line of 1,100 crores plus?
Yeah, in FY22-23 we are going to achieve this, and the numbers are astonishing. As I said, if you see the number of Q2, we had a turnover of 9,500 plus crores, and last year it was 7,890 crores. So there is an increase of 21%. I'm talking about the top line. Last year we had a turnover of 19,381 crores without GST. If you add GST, then it will become around 21,500 or 22,000 crores. So the way things are moving, see, we are up by 21% the financial turnover. So in time to come, we are certainly going to basically surpass the turnover of 19,381 crores. So the top line of 21,000 crores plus is looks an easy task. And in terms of the physical delivery, we are much ahead of the performance. Basically, we had the performance in FY21-22. So we are again going to commission or achieve the performance of FY21-22 in FY22-23. So in terms of the physical as well as in terms of the financial, we are going to have all-time high.
Okay. And last question would be, could you just give us some update on the Krishnapatnam JV arbitration, which was, I think it was going to come in CY22. Any of that on that, and how much monthly payments are we receiving from that particular JV?
So let me explain it like this, that first of all, the Krishnapatnam, the project was a sanctioned project of Ministry of Railways in PPP model, and whatever money we have spent was for the purpose of project execution. We roughly had 2,400 crores, out of which we have received 1,600 crores. Now, the trade receivable which we are talking, somebody asked in the beginning, is 809 crores plus 611 crores interest. So 1420 crores. So if you see the performance of this particular company, this has made a turnaround in terms of the traffic. And there is an increase of traffic by 71%. And you try to understand and appreciate that it is the all-time high. And for the first time, we have started making profit, and we have commissioned 2 more stations, that is the Brahman Pale and Veli Kalu. These were required in order to have more and more traffic in Krishnapatnam. We are also constructing a bypass line that is also likely to be commissioned in December 2022. So if you see the earning part, there is a substantial increase in the earning of KRCL. We were in loss in first 6 months in FY21-22, which has now become a profit. So if you see the financial figures, KRCL increased from minus 36 crores to plus 23 crores, and RVNL share increased from minus 18 crores to plus 12 crores. So what I wanted to tell you is that there is a continuous increase in the traffic in KRCL, and regarding the payment, regarding the arbitration part, yes, I will tell you some of the dates in connection with the arbitration. See, the arbitration proceedings started on 24 January 2020, and the pleading completed in January 2022. As per the Arbitration Proceedings and Act, the amendment, it is required to be completed in 1 year time, 1 year after completion of the pleading. But in between, what happened is that because of the COVID and its impact, a grace period has been given from 25th March 2020 to 28th February 2022. So as such, officially the proceedings and award should be over by 28th February. They have already conducted the cross-examinations of the claimant, and the respondents' cross-examinations are also over. Ministry of Railway had filed few applications which are being basically resolved, and the main hearings will start, and we are hopeful that by this timeline in FY22-23 we should get the judgment.
Thank you for this. And could you just give the amount, I mean, to how much is for the arbitration? How much have we filed for it?
How much you want to know the money pending with the arbitration? Okay.
No, not for the money spending. The money that we will receive from, if the arbitration is an hour, how much money will be received from KRCL?
We will be getting straight away that 809 crores which has been spent in the project along with the interest.
Oh, okay.
Because it is a money which has been used in the project implementation. And one more thing which I wanted to tell all the investors, that this particular company has already resulted into 14,000 crores plus of revenue for Ministry of Railways without any additional investment. And when the project was in the execution stage, it used to be discussed in the Pragati portal. There was a lot of stress to commission the project. And the project has been completed and commissioned, and it was in the overall interest of the country also.
Thank you very much, sir. Ladies and gentlemen, please can we ask that you restrict your questions to two at a time? When you have completed those questions, you may rejoin the queue. The next question is from Subham Shukla of Vikas Capital. Please go ahead.
Hi everyone, good evening. So let me just quote Mr. A.K. Chaudhary, a public relation advisor in finance.
Your voice is not clear. Your voice is not clear. We are unable to follow your question.
Sure, sir. Let me first quote Mr. A.K. Chaudhary, public relation finance advisor. What he said in investor call June 2022, around 22,500 to 3,000 crores of is a realistic cash balance required for this business. Right now, as on Q2 2020 this year, it is standing around 3,600 crores. Is it alarming that cash in hand is heading towards downwards? Are we expecting some lease payments in a short period of time, maintaining the minimum required balance?
No, we have the minimum required balance. We keep getting, our system is such that we work for the railways and every month we get the reimbursement. So cash balances are not alarming.
Okay, so I have one more question. So how revenue from execution work is segregated? Like which segments in execution work bring the most business to the firm?
Hey, tell me, your voice is not at all clear to me. You please tell again.
Yeah, okay, sure. Let me repeat again. How revenue from execution work is segregated? Which segments in execution work bring most business to the firm?
No, actually our revenue model, as you must be aware, is on the railways work that we get, we have a management fee system. That is for the total execution of the project, we get around 8.5% as management fee. So irrespective of whether we do new line or doubling or gauge conversion, this will be in the range of 8.5 to 8.75%, and national projects would be 9.25%. So our profitability would not go up and down depending on what kind of work we are executing.
No, sir, I wanted to ask you, like, which segment in execution work is the most business which brings business to the firm, like which has the highest weightage in the business?
Just if I have understood correctly, you are asking that which segment will have more challenges or which segment will have more profit. This is the basically aim of your question.
Which segments bring most orders, bring most work from the firm?
Which segments will bring most orders?
Which segments will bring most orders? See, our expertise have been the railway sector and the metro sector only. And in time to come, we would like to concentrate on this. But in order to expand our business, we thought to bid in the road sector, the consultancy works, and also the marine works. And then we also thought that we should enter into the waterways. We are trying to basically make footage in have the footprints in all kinds of segments. And in time to come, you can see that yes, things are happening. The marine work in Maldives, which we discussed, is just an example of that.
Thank you very much, sir. The next question is from Rikan Gopani of Breed Global. Please go ahead.
Hi, sir. Thank you so much for the opportunity. Am I audible?
Yes, you are perfectly audible.
Yeah, thank you. Sir, I have two questions. The first question being, for whatever bidding has happened, you said you have bid for 40,000 crores worth of projects in the first 6 months. If you can help understand what is the proportion of railways orders in this, and whether, let's say, if similar kind of orders were bid last year, what was our market share, and whether we have been able to maintain the market share even in the competitive bidding space with railways itself.
Okay, so let me explain. We started bidding about a year back, maybe slightly more than that. And the 40,000 crores plus is the cumulative figure. So maybe some will be in the previous financial year, but more than 90% will be during this financial year, FY22-23. We have got basically orders, or we have become L1. That is around 8,200 crores. So that makes around 20% of the strike rate. Coming back to your question that what is the percentage of the railway segment, we want to remain connected with the Ministry of Railways. We want to remain very, very active executor, railway infrastructure executor. But unfortunately, we have out of 8,200 crores, it is around 500 crores only project, which is a railway project, and that too it is in the Northeast Frontier Railway for construction of tunnel. See, we have got the expertise in the tunnels. We are executing the longest tunnel in Rishikesh, Karnaprayag. So that is a tunnel project which we have bagged from the market for the Northeast Frontier Railway. So the percentage out of 8,200 crores, the railway part is only around 500 crores.
Understood, sir. So just one clarification here. Is it because Railways has not ordered as much during the first half, which is causing this, or there has been a lot of private, companies which have won orders because of which our number is lower this year from Railways?
It would be slightly difficult to answer to the point, but what I will say is that Ministry of Railway has got huge plan. For the station redevelopment, they have got 200 stations. Recently, they have sanctioned 10,000 crores for a 3 number of stations development. Similarly, in the double line gauge conversion, there plenty of works are coming up. And we are actively thinking to participate in some of the tenders and the contracts. And in time to come, you will also see that we get large number of orders from Ministry of Railways also. But at this moment, we have got only around one project costing around 500 crores. But in time to come, you will see that the figures are changing, and maybe we will have more orders from Ministry of Railways.
Fair enough. That was quite clear. And just one question related to that. So given the inflow which we are having from non-railways and the outlook for railways ordering also for the going forward period, we have seen a very strong, compounding growth that our company has delivered over the last 5-7 years. Do you see your growth rates at least, maintaining those kind of historical rates, or how do you expect FY24 and beyond for the next 3 years or so in terms of growth outlook for the revenue?
See, presently we are having a growth rate of 25%. Now, if you see the turnover of the last 3 years, FY19-20, which was 14,530 crores, I'm talking about the turnover. And 2021 was affected by the COVID wave 1. 21-22 was again affected by wave 2. And these 2 financial years, we had the economic slowdown. But we exceeded all the physical performance and the financial targets in FY 2021. Then again, we surpassed in FY 21-22. So this generated a confidence that during the COVID year, during the period when the entire world was struggling and we could achieve our target, then we could survive, we could sustain, and we can maintain the growth rate. So let us first see the FY 22-23. FY 22-23, we are certainly going to cross this 21,000 crores plus mark. So the growth rate of 20-25% will maintain. Regarding this 23-24, the way we have been working, the way we are now getting the orders from the market, maybe it can go down or it can go up, but efforts will be there to maintain the same kind of growth rate. And as I said in the beginning, that we are eyeing for an order of 1 lakh crore. The idea behind having the order of 1 lakh crores all the time is to maintain this growth rate. And we are pretty confident that in time to come, we will be having this kind of the growth rate continued, and we will remain pioneer in building all kinds of infrastructures in the country.
Thank you, sir. The next question is from Prithvi Raj of Unifi Capital. Please go ahead.
Sir, I just have one question. See, till now, the company has been focusing on the domestic markets, and now the focus seems to be on the international markets. See, what kind of project level risks that you expect in the international market, and how are we equipped to manage these risks?
The last question, you please tell me again.
So how are we positioned to manage some country level risks in these international projects?
See, for the international project, our focus was to remain confined to the railway infrastructure, metro, and some project of importance by the Exim Bank or Ministry of External Affairs. So we have got the expertise of the railway infrastructure. So if we are getting the projects in the railway sector, there will not be a problem. Second is the metro. We are executing metro projects in Kolkata, Indore. We are likely to get the orders from Chennai and Surat. And then we have also undertaken MTP projects in Hyderabad. So with the kind of exposure and expertise which we are having, we are also very confident in the metro projects. And in the expression of interest called by Exim Bank for the Mauritius Metro, we have been shortlisted. So that is a plus point. So the railway infrastructure, the metro construction overseas, we are comfortable. The third segment is the MEA or Exim Bank's project. In Maldives, we are getting one project costing more than 1,500 crores. See, our strength has been the project management skill, and we have got a pool of around 800 plus, around 1,000 contractual engineers, and we have got pan-India presence. We have got exposure of all kinds of projects. We are involved in the full project life cycle, right from the concept to the preparation of DPR, design, execution, then defect liability. So we are pretty confident that in time to come, we will have these international projects executed in a very professional manner. We are in touch with so many other government departments overseas. And as I said in the beginning, an office memorandum was issued in December 2021 by Ministry of Railways to Ministry of External Affairs, and that they recommended that whenever there is a project, the MEA should strongly consider us. So everything is moving in the direction which we want to have. And for the international project, we wanted to have the footprint which we are getting. And we will make sure that these projects are completed with the full satisfaction. We want to showcase that Ministry of External Affairs or to the Government of India that we are really very, very professional, and we will definitely complete and will meet the expectations of such government agencies.
So just a follow-up on this, let's assume if there is any delay in the international project, will there be any impact for our balance sheet?
Yeah, this may impact. See, in the beginning, we may not have that kind of margin, but at the end, maybe after gaining some experience, our margins will increase. See, I said in the beginning that we are in the process of opening a procurement cell. The procurement cell will basically procure the material, whether it is cement, steel, whether it is India or the overseas. So whenever you are executing the project, if you control this procurement part, then you are having slightly improved margins available. Then large number of EPC contracts are now being awarded. The beauty of this EPC is that we can do the value addition in the design part, and the kind of expertise and exposure which we have got, we will definitely do the value additions, thereby saving in the project. So what I wanted to tell you is that we have got the exposure, we have got the expertise, and we can always do the value addition, and we can always have the margins available in time to come.
Thank you, sir. Ladies and gentlemen, just a reminder to please limit your questions to 2 at a time, and you're welcome to rejoin the queue. Our next question is from Venkatesh Subramanian of Logic Pre-Investment. Please go ahead.
Hi, sir. Good afternoon. Sir, most of the questions are answered, but just a little bit of clarity on just 2 things. One is, you mentioned about the Kyrgyzstan order. I think it's like a pioneering order for you. What is the value that you mentioned? And second question is, you said at any point of time you would like to have a significant order book in the range of 1 lakh crore plus aim for a 20% CAGR growth over the next few years. So the current 55,000 crore orders, when it's completed, you are basically aiming to keep replenishing the order at the range of 20 to 25,000 crores every year to keep the scoreboard ticking. Is that right, sir? Is my understanding right?
Yes, yes. So let me first explain. You asked about the Kyrgyzstan.
Yeah.
We had signed an MOU about a year back, and there were 4 projects which were identified, and the total number of kilometers involved in those projects was around 1,000 kilometers, costing around, in terms of Indian rupees, 20,000 crores. We have prepared the DPR. And the 4 projects, basically, I do not remember the names of the projects. One project was of 225 kilometers. Second project was 180 kilometers. And the third project was for some ring railway. And the fourth project was reconstruction. So, if you see, and this will again impact RVNL in a very big manner, because it is somehow like a nomination work only. So, this is about the Kyrgyzstan. Now, regarding the MOU, regarding the basically order book, see, what I had said is that we have got order of around 55,000 crores plus. We are getting orders from the market. We will get some orders from the SPV also. So what we want to have is that at all times we should have a 1 lakh crores in order to have the same kind of growth rate. So this is the idea behind having this 1 lakh crore order all the time. And see, it is very difficult to change the model. Earlier we were in a capex arm or the executing arm of Ministry of Railways, contributing more than 35% of the railway infrastructure. And in 1 year time we have changed our model. The key strength of RVNL has always been, I always keep on saying that the proven track record, which imparts the confidence, is number 1. Number 2, we have got a very focused approach. Number 3, flexibility. And it is this flexible approach that we have changed from one model to another model. We have not only survived, we have not only exceeded the targets, physical and financial, during the COVID years or during the period when the economy was slowed down. So these were the reasons because of which we survived and we excelled. 1920 it was number 1 PSU in the country, not amongst the railways. All the PSUs it was number 1. So we are eyeing for this. These are the targets which we are setting for ourselves. And if we achieve this 1 lakh crores of this order book, we are very confident that in time to come we will have the same kind of growth rate. And see, I will tell one more. I will tell something about one more project. There is a company called NHLML, that is the National Highway Logistics Management Limited. It is a subsidiary of the National NHAI. They are supposed to make the multimodal logistics parks, that is we call MMLP. These are the world-class logistics aggregation and the disaggregation points, and they have identified 35 locations. And for this, a project-specific SPVs are required to be made, and the role of RVNL will be participation in the ISPV, the participation in design, planning, DPR, feasibility, and the track execution part. 2 days back, you must have seen a news item where the Reliance to develop a multi-modal logistic parks as being the highest bidder. This will be for 45 years for managing, operating, and the maintaining this logistic park. This is near Kodambatu in Chennai. The total length is about 10.4 kilometers. Project cost is 1423 crores. And in that particular SPV, the total equity will be around 600 crores and RVNL share will be 26%. So what I want to tell you is this is another model where in time to come you will see the footprints of RVNL spreading all over the country at 35 locations.
Thank you, sir. Ladies and gentlemen, due to the paucity of time, we will only be able to take 2 more questions. The next question is from Hardik Jain of Whitestone Financial. Please go ahead.
Yeah, good evening, sir. So if you can share us of various SPVs, what is the profitability for the 6 months and what is the amount of investment RVNL has in equity and in debt in various SPVs?
Okay, I don't have all the figures, but briefly I will tell you that the equity participation varies from 30% to 50%. It cannot be more than 50%, it cannot be less than 26%. As per the policy guidelines issued in December 2012. In Kutch Railway, we have got a share of 50%. In KRCL, 49.76%. In ASRL, 32.70%. In BDRCL, it is 35.46%. In HPRCL, 30%. We have already commissioned 4 number of SPV. 5th SPV, ASRL. It is again a matter of pride that we are going to commission in FY22-23. It will be a game changer in transportation in Odisha and Eco Railway, East Coast Railway. What exactly we will be doing is that it will improve the transportation of coal from Talcher area to Sukinda and Banswani, iron ore from Banswani to Angul and Sukinda, then minerals from the Dhamra port to Kalinganagar. So what I am saying is that this is one of the challenging things which is happening. Yesterday, one of the station which is basically connecting station in East Coast Railway, Bagwapal, was commissioned. So these SPVs are working. Now coming back to the the performance in the first 6 months. See, in FY21-22 we have an improvement of around 20% in Kutch Rail, KRCL and BDRCL. But in FY22-23 in first 6 months, there was an improvement of 103% in BDRCL. The total number of rakes in first 7 months, 503 to 1023. Krishnapatnam is increased from 1800 to 3090 rakes, increase of 71%. And there was an all-time high of 543 rakes in July 22. And as I said, we have commissioned 2 more stations as per the requirement of South Central Railway. So these SPVs are performing exceedingly well. And if you see the performance in terms of the loading and in terms of the earnings, the increase in the KRCL is around 86% in terms of the million tons, and a portion earning may be around 100%. And if you see the KRCL last financial year, there was a loss of 36 crores, and in first 6 months it is now profit of 23.5 crores. So the profit of RVNL is approximately, since we have got a share of 49.76, it is around 12 crores. Similarly, BDRCL, there was a turnaround. We had a loss of 0.5 crores, which has resulted into 39 crores of profit, and in RVNL share it is now 14 crores profit. So what I wanted to tell you is that if you see the performance of the SPVs in overall, there is a remarkable improvement in FY22-23 with respect to FY21-22.
Thank you very much. Ladies and gentlemen, our last question is from Sahaj.
No, just a minute. I have got another conference, the investors meet from 5 o'clock. So I can take one more question quickly and then I'll close it.
Thank you, sir. The last question then is from Sahaj, who is a retail investor. Please go ahead.
Hello.
Yes, please.
Congratulations, sir. Sir, I had one question. When I'm seeing standalone and consolidated figures, I see the revenues and expenses are same, but we get the share from JV. So it may be some accounting concept. Can you just
Yes. When in the consolidated, we have JVs in which we are not, it's not a subsidiary. We have up to 50% or less in the share. So there we only take our portion of their profits. Is that clear?
Sahaj, does that answer your question?
Yeah. Clear. Thank you.
Thank you.
So very, very good evening. And
thank you very much.
Suppose this because I have got another investors meet. So, and if you are having any other question, then you can mail it to the company secretary, and then we'll see what best we can do, and then we will also send the answer.
Thank you very much, sir. Ladies and gentlemen, that then concludes today's conference call, and on behalf of Rail Vikas Nigam Limited, that concludes this conference. Thank you for joining us, and you may now disconnect the lines.